Yeah, once again, good morning, everybody. Just by a quick show of hands, how many here have ever done any angel investing? Cool, we got about a third. How many are entrepreneurs here in the room? All right, I think we have a good representation overall, so hopefully this will be an interesting talk. Angel money is really quite a nice phenomenon for entrepreneurs that have started a company and are looking to grow. Here in Canada, you have unique circumstance in that there are monies available from government and economic development agencies, IRAP as an example, to sort of get you started. That really doesn't exist in Silicon Valley, although there is sort of friends and family funds that are available, or your own monies if you've ever done a startup. On the other hand, you have VCs who have a minimum level of investment that typically starts for smaller funds around 500,000 and often goes up. Many funds won't invest anything less than 5 million because they have a lot of money under management, are really looking to put it to work. So angel funds and angel groups, which is the subject of the talk today, are really that mechanism to fill the gap in between lower level friends, family, and government funds and VCs at the high end. One of the other things that's going on here in Victoria as well is there's been a lot of interest, if you will, in angel funding, and individuals who have placed monies into companies but no formal angel group. So there's the Greater Vancouver, thank you, Angel Network, that has had some early meetings and has started to pull themselves together. But what we'd like to do here is to share some information, and those who are looking to potentially do angel investing as a group, go ahead and reach out to Brent and some of the others. So with that, I'd like to go ahead and get started. We're going to go pretty rapid. Let me see. Here's switch underneath. Okay. Where's my AV man? I just need to fire up the. Oh, there we go. Thank you. Yeah, it's this one right here. That was easy. Oh boy, the new stuff. Where's my slideshow? Slides. This is the new PowerPoint. Perfect. Okay. Sorry for the delay. So we're going to hit a few topics. I've got about half an hour. We've got 35 slides, so I'm going to hit a lot of these topics in rapid fire fashion. And what I'd like to do too is to, if there are opportunities for questions, let's go ahead and stop and break it open, and I think we can be flexible with times. Disclaimers, this is not for accredited investors. We're not giving legal or professional advice, and this isn't a commercial for Sandhill Angels at all, so more educational. Angel organizations have been growing steadily even through the recession that we had early in the decade, and are continue to grow even now. This was the latest statistics that I had, but I would guess throughout the United States and Canada that we're looking something north of 300 different angel organizations. And everybody's got their own story. Me personally, I was able to build, not huge, I'm not rich by any stretch, but enough wealth in the tech market through some IPOs, through some real estate, that I had discretionary funds that I wanted to go ahead and invest. And for me, at least, it was a question of portfolio diversification, because almost everything I was doing was hardcore tech. Those are my friends are, those are the deals that I saw, and at least in my case, I wanted to connect with an angel group that gave me exposure, not only really good tech deals, but also a wider variety of deal flow. So my angel investments are actually mostly outside of tech. I won't detail them here, but I have deals in the retail sector, I have some internet B2C plays, I have some life sciences stuff that is, and seafood transportation. So it's really all outside of my core expertise, but I was able to identify and to pick those deals really as a function of being part of an angel group. So we have a collective intelligence, if you will, that's able to share activities of screening deals, to do due diligence, to my expertise is marketing. I wanted people that were good at operations, good at finance to look at the deals, wanted to take the term sheets that were put together. We're going to talk a lot more about term sheets a little later, and to go through and build a real strong legal basis for those investments as well. Plus, angel groups are kind of fun. You get together with like-minded people. It becomes both an activity of work and investment, but also an activity that's social as well. And I'll compare and contrast some angel groups as we go through. So to become an angel investor, first off, this is a US term. You have to be an accredited investor. What they don't want you to do, because these are unprotected investments, unregulated, they don't want some grandmother with a pension fund to go ahead and put all of her riches into one of these high-risk investments. And so in the US, and I'm not 100% up on Canadian law, but you have to have a net worth of 1 million plus reasonable salary, or a net worth of 2 million straight out of the box. Now all of a sudden you're at the level where you can afford to lose a little bit of money, and that's what they're looking for here in terms of guarantees. It does take personal time. If you're working full-time and you have a family full-time and everything else, maybe this isn't right for you, but I treat it for me as a hobby, and it works out. Typically, you want to invest enough to matter. Some groups say $10,000 is a minimum investment per year. The ones in Silicon Valley, typically it's $25,000 per year for the lower ones, and in some cases up to $250,000 per individual per year. You do that per year over many years, and you build a portfolio that then allows you to diversify and spread your risk and potentially make some money here. You have to be willing to wait for a few years. These are typically not fast hits, although that's changing with Web 2.0 and the internet and the social networks, which are seeing exits a little more quickly. But if it's a product company or something that needs to build out over time, then an exit may take a while. And the rest of you can read. By the way, I should say that I can give copies of this pitch to Brent, and it's available for handout for anybody who's interested in this. No issue. And because of that, I am going to skip over some of the points. So if you're familiar with portfolio management, portfolio diversification, it really is a function of risk and reward. And so, if you have a money manager, he'll tell you to put some of your money in bonds, some of your money in large cap stocks, small cap stocks, and this becomes part of an overall balanced portfolio investment that could potentially make you money. Angel investing is high risk. There's a lot of problems. You get these small companies that are really fragile. There's all kinds of issues with the team, the market, the product, a supplier. So you, as an investor, have to take a look at your opportunities and pick the right ones. Not easy to do sometimes. But it can be high reward. Google's like the poster child of successful angel investing, but as Brent mentioned, 7% of deals return 10x or greater. So if you do it, and I'll show you some portfolio management stuff in a minute, but you can actually go ahead and make some money. And I'm at the stage right now where I'm about even. I've about broken even on my various investments. So you worry about asset allocation, diversification, how much money are you putting in. So without belaboring the point, if you take 10 companies that you're invested in, typically you have 3 or 4 of those that will go out of business, 3 or 4 of those that will maybe break even, and then 1, 2, if you're lucky, 3 will go ahead and make the kind of returns that will establish your overall portfolio. This is the way VCs manage their money, and this is the way typically angel groups manage their money, and you as an angel investor should take a look and be familiar with these kinds of structures as well. Again, this is an exercise for later, but here's somebody with $5 million worth of net worth. They decided to put 10% of that net worth into angel investing. So if you do $25,000 seed stages, you can invest half of that money in initial investments and half of that money in follow-on investments. It may take 3, 4, 5, 10 years to go ahead and recoup that, but this is a typical portfolio plan and how it gets mapped out. So the process, I'm going to slow it down a little bit.